Hello, this is John with wesleygospel.com. Welcome. Uh, Today I'm going to talk about my second week of day trading, and that was quite a ride, but I think it was a more stabilizing week. And that is that, here, I get that down there. Appearances. Um, that It was a more stabilizing week. I made a total of $30 in stock trades this week, which was not very impressive, but at the same time, it's a start. Um, Last week was more about making 30 cents. This week it was more about making $30. And what I just did is I journaled my progress. I made small deposit amounts into the green candlesticks, and let's see here. Trading is about green candlesticks and red candlesticks. Whoop, greens and reds. Okay, so when you're using Street Smart Edge, the stock is either going green for the moment or it's going red for the moment. And if it goes green, then that means the price is trading up. People are buying the stock, and the price of the stock is increasing. If it's going red, people are selling the stock, it's going down, its value is decreasing. Now, if you are playing a stock in Street Smart Edge, you have different zoom features on the candlestick chart. And when it comes to the most basic beginner level trading, they call this scalping. So that's what I've been doing in the past 2 weeks, scalping. Um, the first week and the first part of this week was still trading scalping off of the 1 minute candlestick charts, which I don't recommend anybody do that anymore because it's too volatile. The things change too quick on you, and it's just not it's emotionally upsetting. Let's just put it that way. So I don't recommend people scalp on 1 minute charts. I actually recommend that people scalp trends now on the 60-minute charts. Now, a trend is when all the little 1 minute greens and reds are added up over a 60-minute time period to create an average of whether or not the 60-minute time period should be represented by a green or a red. Rather than the 1 minute time period, you're looking at a 60-minute average. So, in other words, if there's more greens in the 60-minute time frame, then the whole 60-minute bar gets turned into a green. If there's more reds in the 60-minute trading time frame, then the 60-minute bar gets turned into a red. So the advantage in trading a trend is there's several advantages. Number one, you have an opportunity to make more money because you're adding up all the little, like if you find a green 60-minute bar and you get in it on it low and you hold it for 60 minutes, you put your money into it, maybe $1,000, $3,000, $5,000, and if you really do want to make money in day trades, this is the type of money amounts that you need to be moving in and out of the stock. So if you don't have that, you have to get that first before you start doing this. The only way to accumulate is to work hard with multiple jobs, as I've said in other videos, 2 and 3 jobs, paychecks, or from a tax return, something like this. But if you're moving the money in and out, especially of penny stocks that are $1 and under, you'll be able to buy a lot more shares and be able to plug much more money into the day trade stock of the. So I recommend picking a green candlestick that is in the 60-minute candlestick green. If it's starting out, a green candlestick is starting out and it's a 60-minute, I would recommend at that point buying it and watching it very closely because it's going to go up, it's going to go down over the course of the 60 minutes, but it will be slower, much more even-keeled, and much more emotionally tolerable. Then it's not going to be like frenetic up and down like crazy like it is with a 1 minute. It's going to be moving slow and steady, and the price movements will be generally trending in a green direction. So you can pretty much expect that it's going to turn a profit. Not that you need to completely take your eyes off it. You need to be watching, the profit movements on your program, but don't hold out too long, because if you hold out too long, you should take what you can get and then re-enter your position in afterwards. That's what I say. Take what you can get. Don't keep on thinking, oh, if I just hold the stock longer, it'll make even more money. Yeah, that's where the deceitfulness of riches can come in and choke the stock and make it unfruitful. So if you have profit, what they call partial profit, just take it. Don't sit there and argue with yourself that, oh, if I could have just held in the stock longer. Look, you can just enter in the stock again. After you take your profits, once that money's yours, it's always going to be yours, right? Um, but if you don't take the profit and you just allow it to fluctuate, it's not your money yet. So I think it's a good idea to just take the profit, take what you can get, and if you still like the direction that the bar is going in, then re-enter your position again. Buy another lot of shares with it and see if that moves. And do that as much as 3 or 4 times. Now, obviously, you can't do that if you're whopping in $5,000 on your first trade. That's an all or nothing trade. So if you do a $5,000 thing, and you hold it for an hour in that little, 60-minute candlestick, it's green, you might make a 7% profit on that. So if you put a $5,000 into a 60-minute green candlestick and it turned out making a 7% profit, well, you just made $350 in profit. If you get lucky enough and you put $5,000 into it for 2 hours, that means that you have 2 successive green candlesticks, most likely, and we're talking penny stocks here. Then 5,000 is you're looking at a 14% profit probably, which would mean you'd be making $700. So that kind of gives you a picture of making $350 in 1 hour or $700 in 2 hours if you're playing with 1 or 2 60-minute green candlesticks. As is always the case, you always want to put a trailing stop of 0.02 PTS. That is a 2-cent trailing stop on the bracket when you buy the shares. When some strange phrases that I picked up on this this week are the expression pips. There's a website called babypips.com, and when you're day trading, you're going to come across jargon. Apparently, with scalping, it also applies to forex, foreign exchange. Not just so you can do this not only with stocks, but you can do this with foreign currencies as well, like Swiss francs and British pounds and stuff. I have no idea about that, honestly. But the concept of a PIP, is a percentage in point. Honestly, I don't know if that even applies to. It doesn't really, I don't think, apply very much as something useful when it comes to scalping penny stocks, but whatever. That's how they measure profit. With scalping, you are not doing any fundamental analysis whatsoever. So everything that you learned about in Philip Fisher's Common Stocks and Uncommon Profits, you could just throw it behind you, right? Because when it comes to trading and scalping, all you're really looking at is the chart. That's it. You're just looking at the chart. You're looking for price action. You're not examining price, income balances, statement sheets, and long-term financial stability. The price of the stock is moving by traders buying the stock all over the world and selling the stock all over the world. So there's absolutely nothing coming in from the sales of the company affecting this at all. You're only looking at price action. That's it on a 60-minute time frame. And also, you're not going to consider any stock unless it had a pretty good looking trend on the chart the day before in the past week. And the best way to do that is to look at barchart.com and finviz.com, the percent change columns on there. Um, Precision timing for buying and selling is still useful when it comes to trading a 60-minute candlestick, green candlestick, but you just don't have to be as stressed out about it as you do with a 1 minute. Seems to be that the closer the time frames are with scalping, the more stressful it becomes, and also the more risky it becomes, I think. So when you're dealing with a 60-minute green candlestick, because it averages all the little green 1 minute things over time, it seems that you can make more profit because there's more patience involved, and there's less risk because the bar is not moving as crazy as a 1 minute does. So a 60-minute green candlestick bar seems to offer more profit and less risk, which is the perfect balance you want to have when you're investing as well. Which is what you would get with a high dividend stock. Investing is about long term, putting your money into a stock and expecting a return in the long time frame. And usually when you're thinking about high profit, low risk, it's the high dividend stock like ZIM or PBR that you're looking for. The high dividend stock in, say, a petroleum company or something, where you're expecting over the course of a year or 5 years to get dividends in large chunks and amounts. That's high profit and also low risk because you're not looking at volatile price movements with that long-term thing going on. Well, when it comes to trading, it seems that the high profit, low risk thing could be found in the 60-minute green candlestick. Well, there's a lot of things that um, I learned this week by journaling my progress with depositing small amounts, first starting off with $100 amounts, then moving up to $1,000, and then finally moving up to a $2,000 amount, and then finally moving up to a $5,000 trade. Of course, I don't lose any of this mostly because I'm using a .02 PTS trailing stop. But knowing how and when and where to trade it is the trick. That seems to be, and learning how to use the software properly so that you can be profitable with it. That's also the tricky thing as well. Um, it seems though that trading the 60-minute trends is probably the best. That's my current opinion about it. The professional traders trade anywhere between 3 and 10 times a day. Um, I don't know if that's necessary to go that high, but um, you do want to give yourself multiple opportunities, though. You don't want to just confine yourself to one try every day. And that's really all I have to say for now. Hourly trends seem to be more, it helps to calm your nerves, and it seems to be more prosperous as well. I'm really looking forward to reading through a book called Profitable Candlestick Trading. It's a Wiley trading book. Profitable Candlestick Trading, and it's by Stephen Bigelow. So it hasn't come here in the mail yet, but I'm sure I'll experiment with that, and if it helps me to, employ even more profitable strategies, I will share that here. God bless you out there. This is all in the ideology of fulfilling Luke 19 verse 16. Master, I made 10 times the amount with the money you gave me. God bless you out there. This is John with wesleygospel.com.